Hi, this is Rachna from XTC Network. ADFW Day 1, taking stock starts now.
Month of December, sellers a little bit louder than the buyers here on Wall Street. It does not appear as if we will finish quite at session lows. Do I need this microphone? Does not appear as if we'll finish quite at session lows, but we will be pretty close here. The tail of the tape into the close. The S&P 500 expected to finish down about 0.4%. Comparable selling across the Dow, the NYSE Composite, the Nasdaq, as well as the small caps as well, which may only finish down fractionally. Technology is the only positive sector in the S&P 500 today. The other 10 sectors are down. Those losses are being led on this Monday by discretionary, healthcare, and materials. As for the Dow 30, Boeing, Disney, and Microsoft, those are your big winners out of the Dow 30 components, and the laggards include Nike, Procter & Gamble, and Amgen. Volatility here on this Monday up a little bit. We're back to a 16 handle for the VIX. Yields very much continue their climb up. How about the 10-year Treasury yield now up out of 6 out of the last 7 sectors? The last time, or last 7 sessions, I should say, the last time the 10-year was this high, you got to go all the way back to Friday, September 26th. That and so much more sets the stage for today's show. And welcome to the show. You're watching Taking Stock. I'm your host, JD Durkin. Just moments away from the ringing of the iconic closing bell. You can hear the applause going on over my shoulder. The team from Sunoco. These are ticker symbols SUN and SUNC here at the New York Stock Exchange to do the honors. And there you have it with the 3 gavel strikes. This is live TV. Is this mic working? Oh, I'm back on this way. We're so back on the stick, Mike. The team from Sunoco here at the New York Stock Exchange, bringing about a close to today's price action here on Wall Street. Your final tail of the tape on this Monday, December 8th. The S&P 500 finishing down 0.3%. The Dow 30 components down 0.4. The NYSE Composite Index down about 0.5%. And the small caps had been trying to make up their mind throughout the session today. It does appear as if the Russell 2000 will finish down 0.02%, still a few points off their all-time high. Let's bring in our first guest, shall we? This is Melissa Otto. She's been here before. She is the head of Visible Alpha Research at S&P Global Market Intelligence. I'm going to hand you the microphone for this one.
Thanks,
and
JD.
thank you for being here.
How are you?
It's great to have you back as always. First and foremost, give me your take. What have you seen across broader price action for these markets? We're still pretty close to all-time highs, even if it doesn't really feel that way, Melissa.
Absolutely. First of all, thanks for having me on this blustering cold winter day in New York City. I mean, I feel like today there was this trepidation in the market around what the Fed is going to do this week and what the expectations are going to be and for the final stretch of 2025 and how it's going to position us for 2026.
How are we positioned right now as we inch closer to Wednesday's Fed Day? We also got dot plot projections. We'll hear the 2:30 p.m. press conference on Wednesday. Wednesday's a big one.
It certainly is. I mean, I think S&P Global Market Intelligence is looking for 25 basis points. There is chatter of a 50 basis points cut in the market. So I think depending on what the data tells Fed Chair Powell, I think it's going to really gauge in terms of how that risk on, risk off trade goes.
Yeah, of course. And of course, there's a difference, of course, with the Fed balancing both sides of its dual mandate, trying to control prices on the one hand,
Exactly.
trying to maximize employment on the other. No easy task for the FOMC.
No easy task.
I want to get your sense on Oracle earnings. The stock has risen 5 out of the last 7 earnings calls. The average gain for Oracle stock is up 17%. It can move a lot after earnings. What's on your radar this week for it?
Oracle's a wild one. It is the levered bet in the space, and Visible Alpha consensus is looking for $16 billion in total revenues, $7 billion in operating profit, so just over 40% operating profit margins, and $8 billion in cloud revenue growth in the quarter. So those are really, I think, the numbers to meet or beat, and then all eyes are going to be on the guidance. What is the revenue visibility for this company, and how are they going to continue to exceed or reach those cash flow goals that they have to meet in order to service the debt and meet the CapEx expectations.
Of course. We're almost out of time, but I do have enough time here to go from one Ellison to another. This Netflix, Paramount Skydance deal, Warner Brothers Discovery. Man, oh man, we've been doing this a long time. I don't quite remember very many stories as wild as this one has been, with a lot of new developments today. What are you following as you try and figure out how this plays out?
Absolutely, it's a wild story. It's certainly very interesting. You know, we're watching it very closely. Friday, you know, it seemed like Netflix had this deal essentially ironed out, and then, you know, this morning I wake up and there's a new bid on the table. So I think, you know, all eyes are going to be on how this shakes out in the end.
Yeah, absolutely. While I still have you, we got a couple weeks left here in the trading year. We're not quite yet at the Santa Claus rally window that starts right around Christmas Eve. What else is on your radar you think investors might want to pay a little bit more attention to as we turn the page into 2026?
I mean, I think the Fed is going to be very important. What is said in that meeting is going to be critical. It could potentially be a catalyst that sends us into the end of the year with a Santa Claus rally. I know I'm certainly watching that.
Yeah, I know we are as well. Melissa Otto is the head of Visible Alpha Research at S&P Global Market Intelligence. Thank you for kicking off the broadcast as always.
Thank you so much.
It's been great to have you. Enjoy Fed Day, by the way, Wednesday. We'll talk with you after that. Josh, you're going to grab your microphone. Bobby, you and I are going to head for a walk this way, and we'll bring you the latest event contract odds from our friends over at Polymarket, who are very eager to try and figure out what will Jerome Powell say during that 2:30 p.m. press conference on Wednesday down in Washington, D.C. You can actually wager on specific words, phrases, references that Powell will make. 84% chance he mentions the word inflation at least 40 times. Bobby, we're going to come around Sarah this way, pardon me. 86% chance he references the government shutdown. 19% chance he mentions the word dissenter, as in dissenting votes on the FOMC. 14% chance Jerome Powell mentions cryptocurrency or Bitcoin, and a 10% chance that he mentions the president by name. We get that press conference Wednesday at 2:30. Bobby, we'll quickly take a look at two NYSE notables on the day. How about the team at Carvana? Congratulations. Today's the first day that they are officially members of the S&P 500, and they are knocking the cover off the ball, up 10 consecutive sessions in a row. B of A securities analysts raising their price target on the stock to $455 from $385. Carvana shares already up 120% from the start of the year, despite a miss on earnings for the October quarter. Shares are already up 40% since November 21st. Hello, welcome to the S&P. Bobby, finally, we'll take a look here at Royal Caribbean Group. Shares down about 2% today, even though the company gave upbeat guidance during its November earnings call. Certainly was not enough to assuage the concerns of investors as of late. The stock is down 32% off its recent highs in August, though shares of RCL are still up 7% on the year. At this point of the broadcast, we're going to bring you a lot of information today and throughout the week you need to know about what's going on at Abu Dhabi Finance Week. That's where FinTech TV's very own Patricia Wu sat down with Scott Thiel. He is the CEO and co-founder of Token Vest. Take a look.
I'm joined by Scott Thiel, CEO and co-founder of Token Vest. So let's get right to it. In a sentence, what does Token Vest do?
Token Vest is really born from the idea of giving everyone access to regulated, high-yielding, high-quality investment products. So we are able to create, structure, tokenize, and distribute these investment products to all investors, including retail investors.
Now, you've said that real-world assets are the most important shift since ETFs, exchange-traded funds. Walk us through that thinking.
The thinking really for us is around how do you actually take fantastic assets that everybody in the world would like to own, but can't afford to own a whole one, or are indeed excluded from investing in them in the traditional financial markets because they don't meet the accredited investor requirements. So for us, this is the ability to actually bring the majority of the world into financial independence.
Well, getting to financial independence, especially with digital assets, we often talk about regulation being a challenge, but since we're here in the UAE, that's not the case here.
No, the UAE, we're really blessed here. It's one reason why I've moved to the UAE, and I was fortunate to be, my former life as a lawyer, part of a team that helped with the development of the BARA regulations in Dubai. So we now have the world's best, most comprehensive set of virtual asset regulations, covers all categories of virtual assets, including financial products. So yeah, we can do the thing that the rest of the world's been talking about and hoping to do. So very much at the front end of this industry.
So if regulation isn't the big obstacle, what is the big challenge and what's the most urgent fix to address it?
Yeah, look, now we can do this thing, which is, and it's only really been in the last 6 weeks since we were fully licensed and got the first assets in market. So, yep, we can now do it. So, regulation problem solved. I think what's now really needed is the education piece, particularly on the investor side. A lot of asset owners have been looking to do tokenization for a number of years, and we have a great pipeline, in the region of $10 billion worth of assets now in pipeline to bring through. But what's really going to be needed now is that education piece, the understanding for people who haven't necessarily been used to participating in traditional financial investment products, that they now can participate. And that is going to involve some education.
And what do you think are the most meaningful use cases that will make it most compelling for these new investors?
Most investors are looking to make money. That's,
Yes.
that's obviously key. And so I think that goes without saying. We're looking to create great product that's backed by fantastic real world assets. But I think it's participation. If I look at what's happened in Web3, whether it's crypto, meme coins, NFTs, a lot of that was driven by community participation, the desire to be involved in something, which might also make me money. And so I think that's going to be a really key part of this transformation to retail access to great regulated products, is the ability to come and actually be part of.
All right, let's fast forward a little bit. Someday, we don't talk about tokenized assets, we just expect it. It's just seamless and invisible. And when would that day be?
That day is pretty much now, actually. If you look at our primary distribution platform, it's completely Web3 abstracted. You don't need to understand blockchain. You don't need to understand digital asset wallets. You don't need to understand custody. It's all integrated and on the platform. Just like you don't need to understand hypertext transfer protocol to use the internet, or how electricity is generated and transmitted to turn on a light switch. So absolutely, the technology is already disappearing. And what people really want is, can I access, can I invest in this? Is this a good product? And really the technology becomes an enabler.
Future is now. Exciting times we live in. Thank you so much.
Thank you, Patricia.
Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Here are a few fintech, crypto, and AI related headlines you need to know for your Monday. First up, the crypto majors all up at least a bit. Bitcoin did fall below 90,000 in the session earlier today. Ethereum up 2.2% and Solana up 1.5% on this Monday. This follows a week that saw the global crypto investment products pull in more than $715 million. That marked its second consecutive week in inflows. And in a bit of AI news you can use on this Monday, IBM set to acquire data infrastructure firm Confluent. It's an $11 billion deal in order to supercharge Big Blue's cloud and AI platform. Shares of IBM were up fractionally on the day. Ryan Campbell joins the broadcast now live from the trading floor. He is the president of Worldwide Construction and Forestry and Power Systems at John Deere. Welcome to the show. That's the coolest title of any guest I've ever interviewed. It's great to have you here.
Hey, it's great to be here. Thanks for having us here today.
Of course, and I know that you and the team from John Deere were here to do the opening bell earlier today. Can you talk to me first and foremost a little bit more about your role with John Deere and your top priorities here at the end of 2025?
Yeah, so John Deere, 188-year-old company. We're known a lot for agriculture, so we have a big, awesome agriculture business. We also have a construction business. I run the construction business, so it's about a $12 billion business, global business that I'm in charge of. And you know, my priorities, it really starts with the customer. Our customers on the ag side grow food and fuel. My customers build infrastructure. And I wake up every day, and my team wakes up every day thinking about how can we help them. It's a difficult job. It's a dangerous job at times. How can we help them do their job easier?
What does global infrastructure demand look like, and how is John Deere, you feel, most uniquely situated to address that demand?
It looks great. Here in the States, the infrastructure investment has been very strong. We need to continue. All of us experience our infrastructure. We need to upgrade our infrastructure. There's a long runway of growth associated with that. Globally, same thing. I spent a lot of time in Brazil. Brazil is upgrading their infrastructure as well. You know, the things that John Deere does and can do, we have a big road building business, the world's leader in road building. A lot of roads need to get built. We all sit in traffic. We need to expand the road infrastructure we have. have, and we have the tools and solutions through our road building business to be able to do that, in addition to all the other equipment that moves the dirt to be able to build data centers and houses and things like that.
And who better than a great American legacy brand like yours than to meet that demand both at home and abroad? Talk to me about the ways that technology right now is helping power further productivity for John Deere. You talk about almost 200-year history. You got to be leveraging underlying tech all the time.
Amazing about us. We're an old company, but we continuously reinvent ourselves. We make big investments in technology. You know what I say, whether you're on the ag side or the construction side, we both face a similar issue. There's just less people that want to work in our industries. The machines are going to have to do more work. So we are building machines that are going to be able to take a lot of the work from the humans, out of the jobs, out of the farm fields, out of the infrastructure and construction sites. And we're not taking jobs away, it's jobs that are needed. It's the productivity that needs to happen to be able to get this important work done. So we're on the forefront of that. We continue to invest in that. We want to make our customers' lives easier.
What most excites you about autonomous capabilities right now, and where you think John Deere can be in the future to meet those concerns?
You know, on the ag side, ag's a controlled environment. We started there. You hear stories about harvest time, I don't see my family. Now I can see my family. Things like that, those are powerful stories for us. To be able to get more work done, get it done precisely, but also spend time with your family. On the construction side, if you've been to a job site, it's a little bit controlled chaos, so the technology is a little more difficult, but it's getting smarter. The machines are becoming more situationally aware. You'll be able to see autonomous construction equipment, not next year, but in the next several years. We're testing in quarries, which is a little bit more controlled environment, but soon you will get it, technology and autonomous solutions on earth-moving sites that you may drive by on a day-to-day basis.
Yeah, Ryan, we're still in an environment where far too many U.S. consumers, especially whether they are directly in or adjacent to the ag space, they're feeling pricing pressures. We're seeing that come up in the soft data. How is John Deere situated to help lower costs for consumers? What do those considerations look like?
Yeah, absolutely. You know, a lot of what we talk about is driving productivity. Productivity drives costs down, and we make a lot of investments to drive productivity for our customers to be able to do more with less. The world spent a lot of time doing more with more. Resources are starting to become scarcer, so we're having to do more with less. We're helping our customers do more with less. Ultimately, that's going to help lower costs.
Ryan Campbell of John Deere here to make the case. It's great to have you.
Yeah, thanks for having me.
Congratulations on all your years with John Deere, and best of luck for 2026. Great to have you.
Thanks so much.
Folks, don't go anywhere. Much more Taking Stock coming up right after this, including the latest from Abu Dhabi Finance Week. Don't go anywhere. Let's do it one and all. Welcome back to the show. Now we'll bring you a few headlines in the world of startups, raises, and rounds that you need to know for this Monday, December 8th. First up at this hour, SoftBank and NVIDIA considering a $1 billion funding round for Skilled AI. It's a move that could triple the robotics model maker's valuation to a cool $14 billion. Next up, hypersonic defense startup Castilian raising $350 million at a $2.8 billion valuation in order to scale manufacturing of its Blackbeard missiles. This as private capital pours into next-gen weapons tech. And finally at this hour, Aru, that's spelled A-A-R-U. It's a startup using AI agents to simulate human behavior for instant market research. It's raising a Series A at a $1 billion headline valuation. We now continue our ongoing coverage of Abu Dhabi Finance Week, and we bring you a recent sit-down from FinTech TV's Patricia Wu, who spoke with Konstantin Vasilenko. He is the co-founder and CBDO at Paybis. Take a look.
I'm here with Konstantin Vasilenko, the co-founder of Paybis. Thanks so much for joining us.
Thank you, Patricia.
So, in a sentence, tell us about Paybis.
So Paybis is a crypto fiat infrastructure provider. Our main goal is to make crypto simple for businesses around the globe and also for retail customers.
So you have a unique, access into data. Tell us since we are here at ADFW, what's the most striking insights you've gleaned about this region?
Yeah, what we see during this year, that there is more and more interest in businesses who are based in Emirates to transact globally, right? More and more businesses are founded and opened in Emirates, and they want to, let's say, do their business worldwide. And of course, the biggest problem for doing business worldwide are payments, right? Traditional banking system is great, but it's sometimes too slow and maybe too unpredictable. So what we see, there is more and more interest in transacting in stablecoins because it's fast, it's reliable, it's predictable. And this is the main interest that we see from local companies when they approach us and they're asking us to help them to get into stablecoins and get out of stablecoins, basically to help them get into stablecoin as a payment method and integrate it into their businesses.
So faster, more reliable. What else is driving this, and where do you see this going?
I mean, the biggest driver, I think, is speed, how you do the business, right? Imagine, traditional banking system, right? For example, you make an invoice as a company in Dubai, for example, to your partner in the US or in Europe. It will take maybe a day, maybe even 3 business days for money to arrive. So your capital is locked, you're not providing the service, customers are waiting, right? With stablecoins, it can happen in a minute, in seconds. So this improves the way how businesses operate. It makes them, let's say, use their capital in more efficient way, right? So they can transact faster, the cash flow doesn't need to be so big. So this is kind of the latest trending thing. And I think where it's going, I think the biggest question now is not when crypto adoption will happen, but how it will happen, right? So the main goal for the businesses is not to figure out like if stablecoins and cryptocurrencies in general is a safe bet. It's more how to integrate it into their existing business ecosystem, business functions, so they can operate without interruptions and without too much changing of their internal processes, but getting the benefits of transacting in stablecoins, which is like fast and predictable, as I said before.
So if it's not a matter of when, but how, what needs to happen to expedite this mass adoption?
Infrastructure. That's why we are focusing on crypto fiat infrastructure, so we can provide access to the companies, to stablecoins, to the banking as well, facilitate quick fiat to crypto conversions and vice versa, make it convenient to integrate this into their existing businesses, right? It's like with electric cars, right? Like 10 years ago, industry just started. Infrastructure was not there, adoption didn't happen. Now, when infrastructure is around us, the adoption of electric cars is happening because it's much more easier for you as an individual or business to get an electric car. The same happening with the cryptocurrencies. So once infrastructure is there, once, for example, all your business counterparties can accept crypto from you or you can accept crypto from them, then adoption will happen. So I think the next 5 years, these infrastructure gaps will be closed by companies like us and different other players on the market. So transacting with stablecoins will be as simple as and easy as it is now transacting in dollar or dirham or other currencies.
Thank you so much, Konstantin.
Thank you very much. It was a pleasure.
I am here with Ray Sharif Askari, Head of Product and Research at Grayscale. So let's just jump right into innovation. That's what excites people the most. And, you know, especially with your position in this innovation landscape, what's exciting you the most?
Absolutely. So just for those that don't know, Grayscale is the world's largest crypto-focused asset manager. We are bringing crypto exposure to investors in compliant, regulated wrappers. It's been a big year for innovation as it relates to regulation and financial products in crypto. For me, I am very excited about staking. Crypto is now an income-generating asset class, and it's very important for us to deliver that incremental revenue stream to investors. And so to do that, we've introduced staking into our Ethereum ETFs and our Solana ETF, which now is returning an income, a staking reward of over 7%. And I think we're going to continue to see innovation around financial products that are using staking to create more diversification and income for investors investing in crypto.
So we're almost at the end of 2025. As we look ahead to 2026, what are you most excited about? Like, what are you focusing on? It could be anything from a trend, an opportunity, some kind of industry surprise that we may not have heard about. Your pick.
So one, I do think we're going to continue to see more regulatory clarity. Two, I think we're going to see Bitcoin reach new highs in the first half of 2026. We have a strong macro backdrop. The regulatory regime is extremely favorable. And it's kind of a hot take, but I think we're going to move past this 4-year cycle narrative. I think that it's been a self-fulfilling prophecy. And I think that given where we are in crypto adoption, institutional adoption, and just, again, the regulatory backdrop, we can move past that. I think we're going to continue to see worlds kind of merge as it relates to crypto native players partnering with financial incumbents to create new solutions. I think cross-chain composability is going to play a big role with that. We see Chainlink, for example, is making huge strides in that area, connecting blockchains to the real world, connecting chains to one another. I think we're going to continue to see fast, scalable, next-generation layer 1 blockchains like the Solanas and the Suis of the world win the day. And I think all of this is going to usher in the new era of crypto adoption.
Oh, exciting. All right. So looking forward to 2026. Thank you so much for that.
Tomorrow here on Wall Street, a lot of crucial earnings companies to keep your eyes on. Tomorrow morning, we will hear from Campbell's Soup and Ollie's Bargain Outlet. And this time tomorrow for Tuesday at the close, GameStop, Cracker Barrel, and Casey's General. Tomorrow morning, 9 a.m., NYSC TV Live and FinTech TV Live will count you down to the open. That's it for the show. We will see you tomorrow. Woo!